got a lot going on in the crypto market today. Bitcoin is still sitting right at the edge of a huge potential breakout, a breakout which I honestly think could be setting this market up to all-time highs. So we're going to be covering where this thing could be going, if it is actually going to be setting those all-time highs, or if it's going to be struggling. There's a lot to go through today. I mean, look at the Bitcoin dominance just to start this thing off. Bitcoin's dominance has now peaked at 59%. We have set a brand new high again today, and Bitcoin's dominance just keeps climbing higher. This is the highest reading for Bitcoin's dominance that we've had since the last alt season basically started, and this is March of 2021. So we are going way back, ladies and gents. There are huge things happening which you may have not even known about that we're going to be covering in this one. So I'm super excited for it. If you are as well, do me a favor and smash up those likes. And of course, while you're down there, double check that you are subscribed and you've got that bell icon checked. But let's go ahead and jump into the analysis here to start off. I've got a lot more that I want to cover with you, including some super interesting ETF data, but I want to keep it locked to the main part of the show first. And it is that Bitcoin has been continuously getting rejected at this resistance level to produce the star price action that I was hoping for. This is the best case scenario that I was talking about in yesterday's YouTube video. Shout out to those of you that smashed up the likes on that and tuned in, because you are going to be very well aware of how I was saying the best thing Bitcoin can do right now is come back down to this yellow line, find support, and then continue on. So, so far, we have successfully found support at this price level here, and we've been able to produce a bounce. The bounce was not super strong, and we're back down to the support level again. I'm not going to start getting too autistic about this and reading into it too much, but we are on the hour time frame. On the 4-hour time frame, you know, it looks like we haven't quite fully gotten that bounce just yet, or at least we haven't been able to mature off this price level yet. But as far as I'm concerned, as long as we hold this this yellow line at basically 66.5, I think Bitcoin is in a really good place. And to give you a reminder, if you didn't watch yesterday's video, the 66.5K level basically represents the prior high that Bitcoin set. It also represents the resistance that Bitcoin found. If I can grab this right here, the resistance that Bitcoin found right here. And if we trace the chart back, this has just historically been a price level that produced really interesting kind of resistance and support bounces as well. So historically, a very important level triggering big drops here. Take a look at this, another big drop coming off this level, but also nice big support bounces coming off here, leading to rallies that actually pretty much challenge the all-time high. So 66.5 has historically been a level where really important stuff has happened, and that's why I want to see Bitcoin holding this level. And if we can continue to hold this level, and then we get a little bit more of a kind of push from demand, I think that's going to be all we need to send this thing higher. Now, like I said in the last video, if we don't hold this level, we're going to have to come down to other areas of support the way I see it. But first of all, I do want to show you some other indicators that are actually providing support to Bitcoin in this range. Our 4-hour Ichimoku cloud hasn't quite caught up yet, but on the hourly, we have a ton of support from the Ichimoku cloud, which we haven't even traded into yet. That's going to become useful basically in the next couple of hours. In about 4 hours from now, we're going to be able to start using this support, and it's going to be here for a while. I think basically until the end of the month potentially, that we could be enjoying support in this range from the 1-hour Ichimoku cloud. If we do take it onto the 4-hour EMA ribbon, we've got a ton of EMA support now that is pretty much caught up with the market here, which I think is a really good sign as well. And if we bring it onto the daily here, a nice big EMA ribbon that's starting to travel upwards. It's going to take some time. Same for the Ichimoku cloud. It's very far below, but this is our next zone of support, and this is all to say that we've got a ton of kind of short-term support that is basically, you know, right where the price is now, if not maybe slightly lower, but basically right where we are now. We've got a ton of short-term support where we are now, and if we go on to a longer-term perspective, we have a lot of really good support down at about $61,000 over here with that one-day Ichimoku cloud, and of course with our EMA ribbon also kind of floating around there. And the reason that this is a really nice level is obviously this is where we produced some really nice big bounces for the market before, and again, we're talking about big bounces, right? This is the bounce right here that actually set the all-time high. You know, on this occasion here, a nice big bounce here, again, nice big bounce coming off this price level. This is a very important, the 61K level, very important level for the market. The previous low that we punched in was lower than this, so if we do punch in a low over here, this is going to be another subsequent higher high. and another subsequent higher low as well. So, you know, just continuing to check every single box as far as kind of market structure goes for an uptrend. We have actually had some very, very educated, smart, intelligent analysts suggesting that this pattern of higher lows and higher highs that we've been seeing is more of an internal structure. Okay, we've been starting to see some really smart people saying that we're in more of an internal structure right now, pulling off these higher lows, right? Basically saying that this isn't actually macro, this isn't actually a chart setup. You know, these higher lows, they don't actually say much for the entire thing, but more so it's just a more isolated thing that we're doing right now, basically inside of a larger downtrend. That's kind of the argument that some very, very smart analysts are making. It's something that I thought of for a while. I never actually said it because I didn't think anybody else was talking about it, but actually it's obvious. Of course, a lot of people were talking about it, so that's my mistake. You know, and I think it's a really good argument. I mean, I also think that it's internal structure. You know, and by the way, this is like the most interesting form of analysis that I ever do, right? This is the kind of analysis where like I and my friends would sit around and we'd kind of scratch our heads and be like, okay, so what's the deal here? And we'd kind of work it out, and then we get a really good kind of plan for what we're going to be doing over the next weeks and months. This is what I do. This is what we do. And if you guys want more content like this, then tell me in the comment section down below that you want to see more stuff like this. And while you are down there, check out the huge offers that you're getting with tons of free cash when you start trading using my links. You're going to get this cash in your account, and any profits that you generate are going to be yours to keep. It's not going to be 30K for everybody. It's going to be less depending on how much money you trade with, but super, super cool with Bybit right there. Apex doing the same thing, and Blowfin as well doing the same thing, but actually much more aggressive. So super cool, well worth checking out Blowfin as well as a great alternative. But as usual, always make sure that you're checking your country's local laws and regulations. But this is actually the kind of discussion that I'm all for in these markets. It's something that I absolutely love, and it's basically the idea that we do have this internal structure setting higher lows right now. You know, my argument and my response to people who think that actually this isn't that exciting is that your internal market structures become macro structures if they have enough of a chance to flourish, right? If they have a chance to break out, if they have a chance to materialize, then your short-term price action will become your long-term price action. And actually, another way of saying this is that inside of an uptrend, me personally, inside of an uptrend, my default bias 8 days a week, 9 days a week, my default bias will be bullish. Okay, and it's very straightforward for why that is. The reason that I'm going to have a very default bullish perspective on these markets is because we're in an uptrend. And so naturally, any bit of price action that you see, whether it's, you know, this attempt at the all-time high, or this attempt, or this attempt, or this, or the one that we're in right now, any of these, you're generally going to have a better time being bullish than you are going to be having a better time. You're probably not going to be having a better time if you're being bearish. And this doesn't mean buying the tops, but what it does mean is, for example, buying the bottoms. Because if you're the guy that's buying the bottoms in uptrends, right, it's not to say that you should be buying high and then selling higher. But if you're buying low and then selling high inside of an uptrend, it's a guaranteed recipe for success, right? I mean, it works out 9 times out of 10. It's obviously, it's not guaranteed, but it's a very, very good, you know, very good approach to the market. Much better than most of the other voodoo random shit that most other analysts and traders do with like 50 million different fucking indicators and just really weird fringe strategies. It's much better than that, just getting back to basics. And I think that's what's really important. So we come back to the idea of this being more kind of internal structure. And yes, you're 100% right, but I think that this internal structure has the best chance we've seen so far of becoming macro structure and actually breaking out. So I'm going to be keeping a very, very close eye on this as we move forward. That was a big kind of detour in the topic of this video, but I think it was an important one. And if you liked it, I need to know in the comment section so we can do more stuff like this. And if you got thoughts that you want me to make a video off of, leave me a comment. I can actually feature your comment obviously in a video, and we can talk about it. Let's talk about a couple of tweets right here before we get back to the analysis here. We've got the Bitcoin therapist saying, study Bitcoin with the US dollar, your money is part of an infinite supply. With Bitcoin, your money is part of a finite supply. So I don't think that, I think the intention here is to say Bitcoin is a better form of money. Obviously, nobody is using Bitcoin as a form of money. It's just being used as a form of investment. But that's okay with me too. And as a form of investment, clearly, if it's such a finite supply like this, that's a good starting point. There's tons of good starting points. I'm not here to kind of pitch to you why Bitcoin is the best thing that was ever created. I fully believe that it was. I mean, I don't want to say it was the best thing that was ever created, because Porsche makes Porsches, so that's probably going to be number one. But Bitcoin might take number two, and you can buy Porsches with Bitcoin, so that's pretty cool too. If we move on here, we've got some really interesting data. Bitcoin is 8% away from pushing a new all-time high, and Bitcoin ETFs surpassed 20 billion in cumulative inflows, or if just flows. I'm not sure if this means inflows too, marking the fastest growth in ETF history. You're not bullish enough, bro. So basically, this chart is showing that as far as compared to other ETFs, including things like gold, for example, we've seen the most inflows into Bitcoin, and it's been the quickest. So the suggestion here is basically that, the big guys that trade with ETFs are massively bullish on Bitcoin, and much more so than other assets that have had ETFs in the past, like gold. This is 100% true. The data shows it, and it's very, very clear to us. But I think there are other factors that are worth considering. I'm not the guy that's going to rain on this parade, right? If there's something bullish about Bitcoin, I'm all in on Bitcoin too. I want Bitcoin to go up. But I also, more than I want Bitcoin to go up, I want to be fucking realistic so that I can actually make sure that I do make money in these markets. That's what I'm here for. And if you do appreciate that, make sure you are subscribed, because you and I probably think the same in that way. And what's really important to keep in mind with these ETF inflow datas is that we're in a very different point in the world now, right? The gold ETF, for example, was 2005 or 2006, maybe 2004, I can't remember, but it was somewhere in the mid-2000s. The world now is very different. It's much, much more globalized. There is much more money moving left, right, and center all over the place than 20 years ago now. It was 20 years ago, roughly, that the gold ETF was released. And so when we're seeing bigger inflows, I want to ask the question, how much of that is because the world has changed versus how much of that is because Bitcoin is uniquely amazing? And I think that, honestly, you and I are probably thinking the same way on this. The truth is going to be somewhere between these two. It's not going to be just because Bitcoin is the best asset that has ever been created in the world. I think that's a big part of it, but I don't think that's all of it. I think that a big part of it is also just that things are different, right? If there was an ETF for something else, it would also be equally impressive or close to as impressive in terms of the inflows, because of how globalized the world is and how money moves around today compared to 20 years ago. And I think that's a really, really important thing to keep in mind, because when we see things like this, a lot of people that are just too bullish, or even, dare I say, desperate with their finances, they're going to take shit like this, and they're not going to apply a sprinkle of reality onto this meal they're about to eat, this meal of knowledge that they're about to digest and store up here. They're not going to sprinkle that reality into that meal, and they're just going to eat it up anyway. And that's a big mistake that I don't want you and I to make, and that's why I'm bringing this up here. And by the way, just while we're talking about kind of some real life stuff going on, we got Cointelegraph here with some really interesting breaking news. I don't know if it's right here. FBI arrests the hacker behind the SEC fake Bitcoin ETF approval. This is actually something that we've known about, that happened a very, very long time ago. Look at this, Gary Gensler with his tweet. The SEC Gov Twitter account was compromised and an unauthorized tweet was made. The SEC has not approved the listing and trading of spot Bitcoin ETFs. This is really interesting because it was days before the real ETF was released that a 25-year-old from Athens, Alabama — I don't even know Alabama had an Athens, they just steal city names from all over Europe apparently — he has been found and arrested for that tweet. So I don't know how many of you guys remember that tweet, but it's interesting to see that kind of tying up. They always do get you in the end, by the looks of it. But yeah, some really it's just interesting to see some of this stuff kind of coming together and tying up here. There's tons more going on. Let me know if you guys kind of want me to start kind of going through the news with you here on these videos as well. Actually, I haven't shown anything I've just spoken about, my mistake, but that's okay. You didn't need to see it. Let me know if you want me to kind of show you the kind of news in these markets, because it's not really something that we talk about too much. Here's the tweet that I was reading from Gary Gensler, but whatever, you've already you've already kind of heard it all. You don't need to kind of get a recap of it. But if you want me to cover more news, definitely let me know in the comment section below. We'll come back to the Twitter and news stuff in a bit. Let's talk about this price action a little bit more. And we were discussing the kind of downside and how Bitcoin has some really nice support down here in the $60,000 price range. I think that this tells us a lot about how Bitcoin could be moving, because if we do move down, we've got a really nice situation on this market, and if we do move up, we've got a really nice situation in this market. Very hard for me to be bearish at this point. Let's take a look at the fear and greed index, slightly lower at 71, which is a good sign. Whatever, at least it's not going up, and at least it's not very high in the 80s or 90s, for example. But definitely, you know, good things, I think, if Bitcoin drops down. Great things, I think, if Bitcoin moves up. There's no losing for Bitcoin right now. It's still in an incredibly strong position, and I think it's going to be holding this strong position for some time. If we take a look at traditional finance, the S&P 500 has managed to set a new all-time high today. It had its pullback. I was talking about its recovery and how I said I think its recovery is going to work out for the S&P 500, and it already has. It set a very small brand new all-time high. It's now retracing a little bit, but still clearly in the same bullish posture. Nothing is changing, and the dollar has continued to move up in quite a spectacular way. I mean, the dollar has now closed in on its big zone of resistance that I've been looking at on this chart for a long time. I mean, if we take a look at this without any indicators, and if I actually make this this box a lot more opaque, we can actually see that this is a very important reversal zone that the dollar has basically found itself knocking on the door of. In fact, we can raise this a little bit. I don't think it matters really to raise it or not. It's kind of more of a general broad range. But okay, let's just move it up a little bit. We are very, very close to this top now for the dollar. Doesn't mean that it is going to top there, but it has historically been a quite challenging zone for the dollar. I mean, if we take one of our nice trusty kind of circles here, let me draw a nice big circle for you guys. Bam, I like that. That's a bit too big, actually. Let's go for a smaller circle. I'm so bad at drawing circles. Look at this. There we go. That's a really nice circle. I'm very happy with that, but it's too small. Let me give it one last shot before I continue kind of wasting your time on circles here. But here we go. And if you take a look at what's happened in this price zone, I mean, while the dollar was dropping down, this is where it paused. When on this occasion here, it just shot straight through, so we're not worried about this. But on this occasion here, big reversal triggered, and it actually swept the previous lows, this reversal. So big reversal getting triggered here. Another kind of very short-term rejection here. Some support on the way down. Big rejection here, right to the bottom of the range. Again, big rejection here to the middle of the range. Lots and lots of support being found here, and now we're coming back up to find potential resistance here. Look, the dollar chart doesn't work like a normal price action chart where it has to find resistance and support at its key levels. We're not expecting that from the dollar. But what I think is a really big deal is the fact that the dollar has consistently had trouble or enjoyment at this price level, and now we're coming up up to it again, right? And so while the dollar doesn't necessarily move like a normal kind of chart with normal price action, the dollar still has clearly respected this particular 104 level very, very well for a very long time. And it's not my business to say that that's going to change. I think it's probably going to be the same. And I think that when you've got such a clean rally up to this level, you really are setting yourself up for a pullback. So to me, this is this is an abundantly clear setup that we're going to be seeing a big rejection off this level. I think that the rejection could take Bitcoin at least down to the kind of middle, like 102, if not significantly lower down to kind of 100 or even lower. I would not be surprised if we saw something like this from the dollar. But obviously, I'm not going to start speculating on, what turns into more of a macroeconomic, more political discussion. That's going to be, a lot of different people are going to have their own kind of ways to interpret this chart. But I think this is definitely looking interesting. Another thing looking super interesting is Polymarket. Obviously, it doesn't matter what you do. The election seems to be a bigger part of everybody's discussion right now. And Trump is up 61% in this betting market here, which is very, very interesting. If you look at many poll markets as well, or not markets, but if you just look at many kind of polls or aggregates of polls, which are even better, it's hard to find a picture where Trump is not winning. And certainly where Trump is not winning by a big margin. Obviously, if you look at super blue, super Democrat kind of sources of information, yeah, it's Kamala winning by a long shot, and it's going to be equally the same if you look at super Republican sources of information. But as you get more center, it's very, very clear that it's kind of more of a Trump government now. And I mean, this can change. There's still 20 days left, and there's, there are a lot more people that are, I mean, fuck me, they tried to kill him again just a few days ago in California. So, I mean, these hitman things are not even making news headlines anymore. Things are very, 20 days, a lot can happen, but it's looking pretty certain from that perspective. And I think that's having an impact on how people feel about these markets. I mean, here we've got another Cointelegraph article just outright coming out and saying most U.S. voters prefer a pro-crypto candidate from the Grayscale CLO. What is a CLO? Chief what officer? That's very interesting. Legal, maybe? I don't know. But clearly, a lot of people interested in a kind of more pro-crypto candidate. And if that has any effect on these markets, that could honestly be why the dollar is going up, because Trump is trying to really defend the dollar more than the current government is. So yeah, I mean, there's a lot of different ways to interpret this. Let's come back to the tweets though. I've got an interesting one for you here. This is from 𝐄𝐱𝐜𝐧. I'm really sorry for mispronouncing your name. He actually runs CryptoQuant, which is a very interesting on-chain analytics provider. And he's cool guy, South Korea and New York City. And what's he saying? If we come back to his tweet right here, the ratio of total Bitcoin USDT open interest to USDT market cap tells the same story, which is basically that there is a shit ton of leverage in the market. Now, I'm just going to break down what these tweets mean because it's a little bit confusing. Basically, this chart is a display of how many people are taking leveraged positions in the market. And so if the chart goes up, it means that there's a lot of leverage positions open. And if the chart comes down like this, it means that those positions are closing. Right now, we're seeing a big increase in those positions. And we're also seeing the ratio of those positions compared to the total market cap of Bitcoin. We're seeing that ratio is getting to a very high level now as well. In other words, the ratio of people trading Bitcoin on leverage compared to Bitcoin's price is very high now. There are a lot of people that are trading this on leverage. In and of itself, I don't think that this means much. It's not that interesting. That's why it might seem confusing. And by the way, if you didn't understand that, just rewind it and you will get it. It's literally just a display of people who are taking on leverage positions in these markets. The reason that this is interesting is that if you get a lot of people taking leverage positions in a market, and by the way, I mean, this is going back 2 years. So this is basically since the end of the last bull market to today, we're seeing the highest levels. If you're getting such high levels like this, then what that indicates is that there are a lot of positions which are probably long right now. And because the market has been moving up while the open interest has been going up. So naturally, it probably means there's a lot of longs. And we know that. We've been seeing this backed with data from so many different perspectives, right? We used to look at the Binance long and short data pretty much every video. And we can do it again right now. The reason I don't show it to you anymore is because it's always the same. There's just always more longs than shorts. And what that's created now is a very clear chart where there are a lot of long positions open. And the ultimate meaning of all of that, and I'm curious to know how many of you have already figured it out. Let me know in the comment section if you figured it out before I'm telling you, because I'm super curious how many of you guys have figured it out. The ultimate meaning of all of this is that there can be a long squeeze. If there are a lot of long positions in the market, and if the price is very high, and if a pullback would look healthy for the market, then you can get a long squeeze where the price drops down massively, and all of those long positions, they either get stopped out or they get liquidated, they get closed out. But either way, what happens if you have a lot of long positions in the market is that the only way to close a position where you bought something, if you got zero up here and an active position, a positive position up here where you bought something, the only way to close that position is by bringing it back down to zero. And the only way to bring it back down to zero is by selling that position. And when you sell something, you're going to push the price lower, and that's going to trigger a cascading effect, almost like a waterfall, a spiral, where it gets more and more intense because the price starts dropping, so more positions have to close. In other words, more positions have to cover it. More people have to cover their positions, and the more you got to cover your position, the more you got to sell it, and the more you sell it, the more the price is going to drop, and the more the price drops, the more people have to cover their positions. It's crazy. It's one of the most regularly impacting phenomena that happen in these markets. And if you don't know anything about it, it probably just means that you haven't had a proper sort of education about what trading means. And that's completely okay if you want to get something like that. Obviously, I've got my course teaching you kind of everything that I know. We're actually re-recording it. You can get in contact with me directly with this link in the description down below, and I'll give you all the information about it. We're also running a super exclusive one-to-one package. It lasts 12 weeks. We've had amazing results with it. People making huge amounts of money, saving themselves from, I mean, we're talking 6-7 figures in losses easily that we've seen in this program here. So if you want to get yourself inside, then you can reach out to me with this link in the description below. It has been so worth it for the people that have taken it for, and it is a serious investment. It's not cheap, but for the people that have taken it, they have seen huge results, because when you're working with large amounts of money, a little bit of an extra edge in the market can be the difference between saving and making tens, hundreds of thousands, millions of dollars here, which I think is such a big deal. And obviously, if you want to learn this stuff, that I described, the kind of mechanics, but you don't want to learn it by paying me something, there's a ton of free resources available online, and even the books that I've got right here, they teach you a little bit of it as well, and they're super cheap. So definitely, well, if you can't afford those books, you shouldn't be trading. That's the bottom line. But yeah, back to the charts here. Or rather, back to Twitter here. I think this is massively indicating, that there could be a bit of a long squeeze on the way. Maybe that means that there's, some really nice potential for the market to take a big kind of flash crash and then dip down. Broadly speaking, in terms of actual market moves, I am not worried about this at all. I am not expecting anything to happen at all. I just don't think that that's what we're looking at in this market. But the pieces are there, and this is something to keep an eye out for, because that picture, that story could continue to develop. It could continue to become more meaningful and more pressing. And if it does become a little bit more important and worth noting, then it's going to be useful that you and I are already talking about these things now. Let's take a look at my final tweet I've got for you here. A Bitcoin wallet from 2011 sends $10 million in Bitcoin after sleeping for 13 years. That basically means that Bitcoins, which haven't been moved for 13 years, have now been moved. Could it mean that there are going to be some big sells of some Bitcoin? Well, $10 million isn't even that big, but could it mean there's going to be some big Bitcoins that are going to be sold? I don't know. It could, it's just another, if things do start dropping, there's going to be a long list of locked and loaded, ready to go, fearful articles for Bitcoin. And this is going to be kind of another candidate that could be kind of paraded around to justify some uncertainty in the markets here. So I think that's going to be interesting. Like I said, Bitcoin's dominance super high, really closing in on that big 60% range. We're going to be keeping an eye on that. Ethereum, in accordance with that, has continued to perform poorly. It's produced another bounce, and it's right back down to the bottom of the range, or getting close to the bottom of the range already. So really not looking too great from that perspective there. And the rest of the altcoin market just, also not in great shape, also dropping quite hard pretty much no matter where you look. Although Doge, it looks like, is at some macro resistance, so that's very interesting. So yeah, there you go, guys. If you have enjoyed this video, you know what to do. Make sure you check out that beautiful like button and subscribe button. That's how you're going to get more of this content straight into your YouTube homepage or notified on your phone, because it is super time sensitive. So you definitely want to make sure that you get it when it's fresh. And obviously, check out all the links in the description for the free cash that you get, which you can trade with and make profits with, withdraw those profits using these exchanges down below. Well worth checking out. And as usual, just make sure that you are allowed to do that in your country of residence as well. Or citizenship. I don't know how the law works, but go ahead and check that out as well if you're allowed to. And thank you all very much for watching. It's been a long one. I'll see you all in the next one. Cheers.